Hello, welcome everybody. It's been a long time since I've done a live stream, so apologies for that. Yeah, so today I am essentially going through Militia Capital ETF. So what is Militia? So essentially, there's a guy on FinTwit. His name is David Orr. Give an introduction first. See, am I typing it correctly? Hmm. I actually don't know his actual tag. I just noticed. Fuck, that's not good. Hmm. I wonder if I type militia, will something show up? Capital. Oh, he has a different. That's a different picture than what he used before. That's probably why I didn't recognize it. Okay, so yeah, David Orr, he runs like a long short ETF. He has also his own long short fund, right? But then he has a long short ETF, and essentially he has quite a bit of. He's based in Osaka, so he has a lot of like Japanese positions. That's kind of like his focus. So I thought it'd be interesting to look at his fund to see if there's any potential idea gen. So the reason why this was kind of interesting is because if you look at Militia Capital, they have like a website. This is closed now. They no longer are taking on additional funds. If I remember correctly, the capital they have is just north of 100 million. Um, so if you look at the return of the long short fund, they have done quite well. And if you look at, let's see, his most recent quarterly letter, this is what he does. So he longs and shorts. He has an exposure of around like he can go up to like 200% long, and then like typically 100% short. So it's some like net exposure of like 100%. I don't know what he's at right now. I think he's even higher than that, maybe some. Oh yeah, they're currently at 245% long, 190% short. But yeah, they're allowed to go above that threshold if they see the market has opportunity. So yeah, all in all, they've done well, with their shorts so far, which has allowed them to go more long. Um, yeah, so 2021 net 72%, 2022 net 73%, and then year to date currently 47%. So yeah, seems like they're doing some good things. No real comment or opinion on Militia Capital, but I just thought that hey, this could be an interesting place to look for some Japanese companies, and I'm always looking for more companies, to buy starter positions on, or to look more in depth on. Okay, so now they decided to, instead of David, instead of taking more capital on the long short fund, that they decided to they believe that some of their strategy, portion of their strategy could have higher capital. So they launched a long short equity ETF with the benefit of this ETF. Like I'm not trying to. I have no affiliation to this company, by the way. I just want to make that extremely clear. But I think what he said on Twitter once was like, he's able to give like a bulk of his like some portion of his strategy and have that put into ETF. Of course, his best performing strategy is in his main hedge fund, but yeah, he saw an opportunity to have a separate fund with some of his core components of his strategy that can scale higher, which is why he has like this ETF. What do I think of it? I have no comments. I have no opinion on it. I mean, right now, currently, since inception, they have generated 24% return over the last. I want to say, let's see, it says last 6 months. So when did they launch it? If they launched it in March, just before the tanking of, you know, Japanese stock market, right? Then it makes sense that they're up, right? But then also the Japanese market is up too, but no real high conviction read on them. But the goal is to just idea gen today. So Yeah, so if you go to the bottom of the or ETF and you go to the bottom, there's a section called Fund Holdings, and you click all. Then you basically, I'm just going to go through all the companies that are Japanese, and then yeah, so you can see there's quite a few of them. I'm going to see if I can download this page, because I know on my phone I can do that easily. So I can print and save as PDF, I guess. Let me do this on the side, not over here. Okay, then I'm gonna essentially put this into ChatGPT. I did one version, which is their third quarter letter. So on their website, they did announce their most recent quarter. So if you look here, they have their prospectus. They have their Q3 report right here. So if you click into it, you'll get a breakdown. But just in case ChatGPT hallucinates, I'm gonna download. I was going and go through this course because they have to report what their holdings are on a daily basis, I believe. So that's kind of the great thing about this, is that you get to see what they're doing on a daily basis, which is interesting. Yeah. So what I'm gonna do. Let's see. I believe this is a document. Create a list of just the Japanese companies, their ticker, and a brief one-sentence summary of what industry or subsector they are in. Yeah, so I'm going to have that load, but then yeah, I'm going to go into my Koyfin, and then essentially what I'm doing is I'm going to import that data into a watch list. And yeah, we're going to review everything in that lens. So ignore this. This is kind of messy, but I'm going to just take basically my columns. I already have columns of what I sometimes look at for other companies, and then I'll just use that on Militia Capital. So, but then I need to. I don't like this one. Give me one sec. I have another version. Okay, so. Okay, let me duplicate this. And just delete everything. Perfect. Yeah, so we're gonna import this information. I wonder if Koyfin allows me to just. Can I upload something? Am I able to import this current watch list? I wonder if I can import something. That's something I've never tried. I have the download function. Well, that's okay. That's okay. We can just normally add these companies in. That's okay. Open House Group, yeah, H45 Sumitomo Corporation, 22 Central, Japan Rail, 8058 Mitsubishi, 8473. Alright, this is going to take some time, so if you guys want to chat with me, ask me any questions, feel free. Oh, just to let you guys know, I just released a new stock pitch on over on my Substack. If you guys want to, you guys can go have a look. So just, yeah, okay. Did I accidentally, I think I accidentally screw it up here and here. Let's see, what did I mess up here? Okay, somehow NVIDIA is there. Delete. Okay, let's see. What do I have here? Your car solution, yes. Open house, yes. Sumitomo, yes. Central, yes. Mitsubishi, yes. SBI Holdings, yes. Unex, yes. Itochu. Sumitomo Realty. I already added that. Did it double count? This can take a while because I know that, so part of David's strategy is that he has, at any time, hundreds of positions. Well, not all by himself, but he has, I believe, 3 portfolio managers right now. So, he can have quite a few. But I believe most of the Japanese positions are his, probably sourced by himself. Because his strategy is that he wants to be diversified as much as possible so that correlation within the portfolio is as low as possible. That's part of his strategy. Oh, there's Buffalo in here. That's a company I covered. Okay, cool. I'm gonna put this on my other screen so I have more real estate here. Oh, these are small caps. Oh, okay, small and large caps. So let me just change that. Mid cap. Okay, so maybe we can start at like what's going on here? How come I can't delete this? I should be able to edit. Do you have to add a ticker for this? Okay, let me just add a small cap name, random one. It's really annoying. If I move it up while we edit. This is very weird. I don't know what's going on. 5.2. Okay. What? There should be an import function, but it's, hold on. I wonder. So I think what I'm gonna do is I'm gonna insert like probably 50 of these names first. So I don't have like too much to handle. And then once I get a good amount, then I will start screening through everything. One thing that's interesting about David's approach is that he mentions that he oftentimes will just generate a one-word investment thesis. So I guess when I'm screening this, I'm trying to extract essentially what it could be that he sees in a company, because that would mean he focuses on companies that are probably have something about them that is the key driver. We're almost done this one. Wow, that's a lot. Am I halfway through this? I'm almost done this actually. 800. Where 2558 467 3003. Find that one. I don't know biotech, so that's gonna be hard. Oh, spirits. Kotobuki spirits looks interesting. Okay, let's see. Let's do by filter by setting market cap first. Ooh, okay, a lot of small companies, which is nice. Like seeing that. Long-term investments. So I used to do this thing where there's long-term investments, but then sometimes I find that on Koyfin the long-term investments isn't that accurate. So I think I need to adjust this one a little bit. Um, yeah. And then EV including long-term investments divide by EV. So that's another measure. So maybe I'll do this one and do that in descending. Probably want the lowest ones first. Yuasa Trading, Daiichi, Nippon Corporation, Sanyo Industries. Interesting. And then cheap dividend. Sanyo looks interesting. CAGR last 22, last year is 22%. Good margins kind of low, but not too bad, I'd say. 8 times PE, next 12 months really high. EV, EBIT 2.2 times, 0.6 times price of book. Okay, let's take a look at this company first. Interesting. So the last year is trading below 3,000. 2,600 to around 3,000. It's gone up to 4,600. So it's up like 50%, 40% right now. Let's take a look at what they do. So Sanyo Industries engages in the manufacture and sale of metallic building materials in Japan. The company is involved in the manufacture, sale, contract work of metallic building materials and internal and external materials, design and manufacture of air conditioning and ventilation systems. Oh, okay. And associated equipment, sale and contract work of solar energy equipment, and export and import of other related products and materials. Also offers aluminum products, including handrails, copings, louvers, I don't know what that is, spanned rail system floors, multi-purpose magic deck and condominium floors, natural ventilation products, metal frame, natural lighting. Okay, so in construction, building materials, design and manufacture of air conditioning and ventilation systems. Interesting. Okay, let's take a look. Sanyo. Okay, they have an English site. Hopefully it has enough information. Okay, so aluminum railings on the ceiling of buildings, system floors, ventilation. Okay, framing, natural light for, this is like a train station. This looks like the the ceiling of a gym of a elementary or high school in Japan. Filler, so this is probably just to weatherproof, so that in between gaps there's no rain doesn't get through. So they start off with components, nails and bolts. Okay, so they wanted to make products rather than distribute products, so they started manufacturing eventually. Okay, so they're like a vertically integrated to do manufacturing, sales, and construction of various ceiling, walls, and floorings for buildings and apartments. So they're like a one-stop shop kind of. Okay, so if you contact them, they can do the flooring, they can do the ventilation, and they can do natural lighting. Interesting. 1948. Okay, so there doesn't seem to be any, yeah, so the English site is mainly just for, yeah, just for people to just get an overview of what the company does. Look at the IR. Oh, this guy looks kind of young. President and CEO Shigeru Yamagishi. Okay, so they have semi-annual report and then they have EQ2 report. Let's see. I would like to see. I'm just loading up an Excel so that I can kind of model these companies. Oh, I should just look at the financials. It's been a minute, guys. I'm kind of like rusty right now. How's the profitability? Let's take a look at that first. Okay, so on an annual basis. Oh, okay. So previously very, very low margins, and then somehow in this year they have margins have improved. We'll just figure out why. Let's take a look at last 12 months. Okay, last 12 months has been dropping. Interesting. Enterprise value. What is the thing about this company? They have a lot of cash. Okay. Market cap 12. Price has gone up. A lot of cash, very little debt. Cash has consistently gone up. That's the question. Okay, so an EV/EBIT standpoint, very, very cheap. Could they get bought out? It could be one of those plays where you're just hoping that they get bought out, right? Wait, did AltaCap talk about this company? Let me do like let me see if anyone talked about it. I wouldn't be. Yeah, look at that. Okay, let's see how AltaCap did. So August 29th. So I think he's on the ball. He was on the ball. So it's gone up like 50% since then. So if we know 5958 stock. 1 year ago, August 2024. Let's do 5 years. That's okay. August 2020. Oh shit. Oh wait. Hold on. August 2024. Excuse my language. Yeah, roughly 50%. Let's just call it 50%. Yeah. Did you write the price down here? No. But yeah, it's okay. So yeah, I think there's some like real estate play maybe potentially for this company. I remember like one of his earlier companies had a lot of like real estate. So yeah, no, this is done well. So yeah, if you guys wanna look up Sanyo Industries, like shout out to AltaCap, go on his Substack where the stock pitch is free. So yeah, nice. Yeah, so essentially the story for that company is that they have continued to generate cash. Margins have been improving. So like an income statement. Revenues, standing, resurface. What's the LTM? Okay, maintaining around 30 billion. Um, they might be doing some shareholder friendly things. So I wonder if there's a dividend thing here. Let's see. Is there a dividend? Dividend yield 5%. So okay, so potentially what happened is they have 5% dividend yield at current prices. Seems pretty. Oh, so they've raised their dividend, I guess. 55, and they raised it 100. Okay. Okay, so if they raise it to 100 in the stock, that's. Let me see. Let me take a look at their Q2 real quick. I can take a look at that. 100, 210. Okay, so 210 on. Yeah. Okay, so 5% div yield. Yeah, so they're more shareholder friendly now. So it's purely the fact that this company has a lot of cash. They're generating margins are improving, and they're increasing dividends. So if we want to approach this like, I don't know how David approaches it, but if we want to keep the thing simple, it could be as simple as that, pretty much. Does seem that what is their forecast? So haven't changed forecast. They believe that they're going to generate 32 billion, 2 billion in operating profit, which is around just under 6.6%, just under 2/3. So in that regard, 1.4, 1.6 would be half, so around 5% dividend. Net income margin, so 480 yen on 4.2, call it 508 times, a little over 8 times PE. Okay, so I guess the easy interpretation is just that it's cheap. Essentially, yeah, it's just cheap, right? And then yeah, so this looks pretty good. I mean, yeah, pretty simple, pretty simple. Nice. Okay, back to watch list. So quite like that one. So out of the ones we filtered, I think we should do. Okay. Small. See if I can move it. Can I drag it? Can't. Okay, I can remove groups. Okay, good. Let me just remove some of these groups. I think it was just screwing me over earlier. Can I edit the name now? What the fuck? Oh, maybe unclassified is just something that is unclassified is just how it's kind of is by default. Like maybe that grouping is, I don't know. Fuck. There we go. Okay. there's that. But shit, fuck. Gonna reverse that. Those are not small cap stocks. Can move that back. Okay, okay. And then moves unclassified up. Got the structure wrong. Hold it. Okay. There we go. Okay. So I don't want it to be called unclassified. Let's create a new group. Small cap filtered. Okay, I'll say small cap yes. Small cap yes. Do that. So out of the ones that I said yes, so we have Sanyo right now, which was good. So we say yes, worth looking more into. And yeah, go to AltaCap if you want to learn more about that company. Okay, next one. Nippon Corporate. Well, let's see if it's worth looking into first. Okay, so we have 190 billion market cap. If this is correct, more than 100 of long-term investments with enterprise value of 92. So enterprise value's percentage of market cap is like only 48%. Div yield 3%. CAGR, EBIT margins 5%. Net income margin 6%. PE 10 times. EV/EBIT around 9 times. 7.7. Free cash flow, negative free cash flow though. Interesting. Interesting. Let's take a look. I don't know what they do. So price over. Let's see. So last 3 years. Okay, last 3 years has been pretty much range bound between 2,000 and 2,200. So like within a bound of 10%. Okay. Okay, interesting. So they engage in flour milling and food business in Japan internationally. They offer premixes, corn products, rice flour, olive oil, yada yada, dried noodles. So I wonder if they source to ramen shops their noodles, because a lot of ramen shops in Japan don't make their own noodles. Only really high end, like really highly rated ones do. Bread, noodles, confectionery, frozen ingredients, ready-made meals. The company also provides premixes, which include tempura flour, okonomiyaki flour, pancake mixes under the Regalo brand. Frozen pasta, pasta sauce, cooked rice. So very like flour-based, carb-based. Oh, involved in R&D of machinery and equipment, healthcare, pet care. Nippon Flour Mills was their previous name. So okay, so if you're bullish on flour, recipe, premium deliciousness. Flour premixes, flaxseed oil, pasta, frozen pasta lunch boxes, health foods. Okay, so these are highly competitive products, I would say. Typically, they should have lower margins unless they have some type of branding power, but for the most part, difficult. How big is the company? 189 billion. Okay, so okay, they do have some good size and scale. Let's see here, English. What do we have in the English filing? Nice. English filings. Awesome. Dividend yield 66 on 2.2K. 66 offered full year on 22K. It's around 3%. Oh, div yield. SPE. Double check their profitability. Very low margin. Very, very low margin. Is revenue going though? Because if revenue is going even at low margins, that's still okay. So it's kind of growing. They're growing. They talked about being overseas as well, so I'm wondering if they're also expanding overseas as well. Interesting. Okay, so revenues increased around 33%. Operating income has grown by over 100%, but then this year they've had a great year, so not sure how that happened. Could be some type of utilization rate improvement, so some type of operating leverage. It was mentioned they have a lot of long-term investments, so let's double check. So in here we can see their balance sheet, how much they have. Okay, 92 billion. 92 billion. That is indeed quite a bit. 46 cash deposits. What liabilities is he? Long-term loans payable. Okay, so they do have some debt. Short-term loans payable. Yeah, so they have like around, looks like 50. So do have some debt. So yeah, enterprise value standpoint, this company might be cheap. Let's take a look. 10 times. Okay. Generate. Long-term investments. Multiples. 10 times. And then the question becomes, okay, so is this a one-time thing? Like, is the profitability like a one-time profitability thing? Because they suddenly the operating income just skyrockets out of nowhere, right? So let's take a look at profitability. How did that come about here? So SG&A margin falls down to 18%. Really high EBITDA margin. Slow down capex maybe. I see. Pretty poor RIC. What's the angle here? Let me think. What's their forecast? What are they forecasting here? 424. Wow. And they have 6% increase. Not too bad. 21, so 5% operating income. So dropping that down. Enterprise value, it's around like 100. Let's say it's it says 120. Around 6 times, 5 to 6 times. And then 190 on 20 billion of net income, so around like 9 times PE. Yeah, a little under 10 times. That's what it's expecting. So what I would look at is like how I foresee revenue to grow, and if they have like some outsized operations, because if they're penetrating in different markets, then that could be great for the company. Do they have Utah flour milling commences full-scale operations. Ooh. So, okay, this could be interesting because if they just recently expanded into the United States, then that could be interesting. Equity investment in Utah flour milling for constructing its new flour mill in the state of Utah and is participating in this flour mill's operation as a business and strategic partner. Utah Flour Milling has a flour milling facility incorporating leading milling technologies and environmentally conscious designs. Okay. Okay, year established in 2023, production capacity. I have no concept of what this means. But it could mean that because this has just commenced full scale operation. I don't know how much. Okay, let me take a revenue breakdown real quick. Are they already generating revenue in the U.S. or is that just an additional thing? Let me just see. Because if that's new and they're able to maintain this level of margin while in the U.S., or they're already generating some margins from the U.S., which has allowed them to expand their margins, that this company has a growth component to it, that could see its multiple basically expand over time, meaning its current 10 times PE is too low. Okay, food, flour milling. What was it last year? Okay, we'll look into that. Hey guys, I just had coffee. I need to use the bathroom. I'll be right back. Just give me like a 20-minute break, let's call it. (8:55 p.m. PT or 11:55 PT). Okay, so we'll do that and we'll come back, and when we come back we're going to look into whether this US expansion, what does it look like, because then that could be just a hidden growth component. So simply, yeah, we're just investing for the growth at a very cheap multiple at really good, and they have the cash and investments to liquidate to expand in the US, so good shit. All right, we are back. Right, so we're looking at Nippon Corporation. So what was discussed earlier was essentially that we figured out that the company is expanding into the U.S., but I have no clue if this is a completely new factory, like a new flour mill that they just opened up, and this is their first one. Because if that is the case, then that could be a lot of upside in terms of revenue potential. I yeah. So, oh wait, hold on. Oh, this gives us some part of the answer. So, our business locations in the USA, so they have Pasta, Montana, and then they have Nippon, California, food materials sales. And now they're opening up a flour mill. So interesting. So I'm not really familiar with the flour business. I don't know how big this is. Um, it seems like this is in the middle, in between the first and second location. Yeah, I'm not as familiar with pasta, and what the product company does. So let's take a look into that. Let's take a look at what the investment angle could be, because yes, the company is cheap. If we factor in their investment securities, but if we just purely look at the company's market cap, it's like okay. But if there's the upside, say, hey, this flour mill is going to give them massive amounts of revenues in the U.S., then that would change my stance. So a couple things we have to do right now. One is look at their investment presentations. Let's check if there's a breakdown on U.S. and Japan sales. If there is, what the expectation could be for this flour mill, and yeah, see how number one and number two has performed. So let's do that. Okay, so I'm standing. I'll switch to sitting real quick. Nice, another green day in the markets today. At least for me personally. Okay, so they expect fiscal 2025 was a record year for them in terms of net sales operating income, and they expect fiscal 2026 to be even better. So that is positive. And given that they've also have like a new flour mill, that should boost sales. I can't say it takes some time for utilization rate to ramp up, so I don't expect that to hit bottom line. But then I don't know how if they already how OP their sales department is. But they could have, before they're at full scale operation, potentially they could have gone out to get some deals. They have a medium term plan, so we can look at that later. Frozen food business, interesting. Overseas business, okay. Okay, so flour milling is 30% of sales right now. Curious what the impact will be in terms of when the new factory is at full scale in the US. Whether they have any projections on that? The highest margin is actually their flour milling, which isn't surprising because I think frozen food is quite competitive. If what is in the food is frozen food, no clue. 8% EBITDA. Well, EBITDA is not the right number because they have to invest in a lot of. Sounds like they're capital intensive. Processed food, frozen food, professional use products. Oh, this was in food. Okay, this was in flour milling. Oh, okay. So they have a commoditized good here. Flour milling. Do they have a? Do they have an annual report? Ah, very nice. Very, very nice. Oh, this is awesome. They have English filings. So now I just need a brief overview exactly what each segment does because I don't want to like misinterpret flour milling for something else. I mean, artificial rice made from wheat flour. Oh, so then they shifted from making artificial rice to macaroni. Huh. So through advertising, they were able to convince Japanese population to eat macaroni, and then macaroni salad became a staple at schools. That's very interesting. So they have a brand called Oh My. Interesting. I do know that pasta is popular in Japan. They have pasta sauce. Huh. So it seems like they developed flour related products and have used that as a way to branch off and create what it looks like baking products. So there's okay, certain types of baking products, so pancakes, cookies, and some ice cream, something like that. And then they made frozen foods, so like pasta. Microwavable frozen foods. Okay. Okay, the majority held by other banks, financial institutions. Hmm. Okay. Still need to know more about the company. Still need to know more. So the business report, integrated report. I think that's what I'm looking for. 2024 integrated report. Where's 2025? When was this released? Let's see. Hmm. March 31st. Okay, so this is the most recent one, and then there's a June 25th. Okay, so this is pretty recent. Oh, no. Oops. Hold on. Hold on. No. Wrong document. Okay, so ready-made meals, frozen food, frozen pasta, frozen cooked rice, which you see in Korean Z2. Quick macaroni, tempura batter. Oh, this is interesting actually. Okay, so let's see here. So they have buckwheat flour milling. Okay, so they started with flour milling. Yeah, that is what they do. Corn flour milling, rice flour milling. Domestic Japanese wheat. So they absorbed Tofuku flour mills. Interesting. So it's one acquisition. With food materials and processed foods. So they use the flours to make artificial rice, which resulted in pasta instead, macaroni, soy protein. Okay, frozen foods. So they branched off from tempura batter to frozen foods. Frozen cooked rice, frozen what? Don't know what this is. Oh, so they entered ready-made meals business for convenience stores. Okay, so that's like their ready-made meal business. Interesting. Healthcare. I don't know if flaxseed oil is really that healthy. I'm not sure. Thailand market. Okay, so they acquired pasta. So they acquired pasta Montana in the U.S. So Montana is where. That aligns well with the picture from earlier. Yeah, that makes sense. Shanghai plant, Thailand plant, Indonesian plant, invested in Utah Flour Milling LLC. Invested in. So we'll see entered Vietnamese market. So curious if they have a partner in the US. So that's worth looking into. But given they have all these lines, it might not be actually that big of a deal, potentially. They want to get to 25 billion by 2030. So like in 4 years or so, they want to get to 25 billion operating income. EV around like 100 right now. Okay, inorganic growth through strategic investments in new fields and diversifying our business through M&A and business partnerships. So, okay, flour milling, maintaining the operating income before depreciation level. Okay, that's not what I'm looking for right now. Wish they would just have like a segmented breakdown. Here we go. This is a good breakdown. So, okay, food business, they have 4 segments. Frozen foods, processed foods, food materials. So it's like some more daragas like rice flour seasoning. Naka shoku, so ready-made meals. I think this is mainly for like CVS's, so convenience stores. Food materials. So the flour mill they opened in the U.S. would only impact the food materials aspect, primarily. Um, well, they had 24.7% of the flour milling business. Is that in Japan or is that worldwide? Or I believe this is in relation to their market share in Japan. Should be. Healthcare business, pet food, engineering business, food service business such as donut shops, real estate leasing business, sports business. Okay, quite unrelated. Pet food makes a little sense, where that could have some lottery optionality. Donut shops all make sense, make some sense. Oh, but then they're operated by four operating companies. No, under their holding company. Oh, that's fine. Hmm. So it seems that the company will continue to grow. They're just allocating capital, right? They're everywhere. They're in North America. They're in Asia, so they expanded to Shanghai, Thailand, Indonesia, Vietnam now. So they're slowly growing in different places. So with that being said, it seems like that company does have growth trajectory. It's just that at a certain size, doubling becomes a little more difficult. So it's probably not like rapid growth, but more like delicate, gradual growth. Um, hmm. Okay, with that being said, let's fill it. This is worth actually filling out one of these for. So, let's build all the NPPN, NIPPN. 2001. We're in 2025, right? Is what that company is saying. They just said this is the period. Okay. Oh, they do have a secure support. Perfect. That was what I was looking for earlier. Looking for some additional breakdown, that's all. Family Mart accounts for 48 billion yen, roughly, that looks like 12% of sales. And then, oh, it says right here 12%. Itochu takes up 15, I believe. Flour milling, food. So yeah, I would like to see how flour milling has expanded over the years, food has expanded over the years, and how that has impacted their revenue growth. Um, it seems that they're doing good things in terms of building products, even though these are kind of like relatively low margin businesses. But not bad, I would say. But these are low margin businesses, so. Well, there's no U.S. breakdown that I can see yet. We got some type of mix here, because if most of this growth is just purely from Japan, um, then there's a lot more growth because they barely penetrated the U.S. for their offerings. But then again, I would imagine pasta, Japanese pasta made for the Japanese palate is also different from pasta made for the U.S. palate. So what you would find in American grocery stores in terms of pasta is, it might be harder to compete because you're gonna have some, you know, better pasta brands, let's call them. Or even some grocery stores will have their own no-name brands too, right? That makes things a little more difficult too in that regard. Okay, yeah, this was definitely fiscal year 2024 then. 400. Okay, let's see here. So do we have a country look? No. $143 billion in PP&E. So probably capital intensive business here. Ah, good question. So these are, if I remember correctly, these I think are banana Gateron switches. Let's double check. This is a Keytron. Let me just double check my Amazon order. Should be quick because I don't order it that often. These are. Un moment. Let's see. Oh, did I not buy this in 2025? No. Submit. Ah, okay, so these are Gateron Jupiter banana switches. Yeah. Yeah, so what these are, here, I'll just show you guys. So what I like about these ones is that they have a higher actuation force. So they're more comparable to like a Brown. Um, but then it has like, how do I put this? Let's see. You know what? I'm just gonna type in Gateron Jupiter banana, and then you guys can look. Maybe on Jupiter. Oh, banana. Yeah, two-stage spring. Okay, so this is what I have right now. And yeah, there we go. So it has a higher. So before I used the MX speed switches, which were like really low operating force. I was under the impression that, oh, the lighter the actuation force, the faster I can type, right? But I noticed that it wasn't great in terms of the feel, and I think that it actually like made my typing worse. So it's not a really, yeah. So I think with my fingers and with like everyone's like muscle composition is different, right? But for me, I actually prefer like a slightly higher actuation force because I like striking the keys a little bit more. Um, yeah, yeah, and it's a two-stage spring mechanism. So yeah, they're not too loud. Better for the office. They're not like blues, which is super clicky. Reds have what I don't like reds is that they're linear, so they bottom out. So this one has that tactileness while giving me like the feedback that I want. Like I want to feel like I'm actually pressing something, right? So yeah. So yeah, highly recommend these. And the keyboard that I'm using, if you are interested, is this one. So Keychron V6 Max, full size custom keyboard. Great keyboard, by the way. Highly recommend. Let's see how much. Banana Switch. That's not bad. Good price. This is Canadian, by the way, so you can probably get it for cheaper in the U.S. even if you're based in the U.S. But yeah, you can use Bluetooth. You can have it wired. You can have it like, yeah, it has a dedicated volume knob, which I like. You can program the keys. I have my own macros and stuff. Yeah, highly would recommend this. Yeah, if you like brown switches, but you want something like higher actuation force, I think then I would go with this one. Yeah, and has I can't remember what the two-stage thing is though. What makes a two-stage or a single stage, two-stage? What makes a two-stage thing? Earlier tactile bump and stronger tactile feedback than a regular brown switch. It features a two-stage spring to provide a stronger return and a more consistent. Yeah, I definitely do feel that. So yeah, really like these. Mm-hmm. Welcome, Tate Thompson. Okay, where was I? Okay, book value. So still below price to book. Retained earnings at 177 billion. So this company has been generating income. They're not just like punting it off on assets, let's say. So that's good. yeah, okay. So my first mechanical keyboard, I used blue switch, which was nice. But then it was um, it's like an entry level mechanical keyboard, so it's kind of crappy. So in the first year was nice. I think maybe by the time it was like second year, it was kind of mushy and a little bit too loud. So that if there's a video call or whatever, it just like sounds really fucking annoying. And then the second one I tried because I was doing a lot of financial modeling, a lot of data entry. So I was like, oh, Cherry MX speeds, right? They have like a 40-gram actuation force, so that must be the best, right? Because the lower actuation force, the faster I can type. But it felt like absolutely nothing, and I think that resulted in me having like right forearm pain contributed to that because if you think about it, if you're just bottoming it out all the time, there's no feedback. Actually, having a spring help lift back your finger up is kind of helpful. That's what I found. But I never tried brown switches because I just thought brown switches were not as cool as blue switches. And so then after that, I tried red switches, and then red switches, I went to the Razer Huntsman Elite. What is that one? That's like an octo mechanical keyboard. That's like it uses like a light, I think. Wait, hold on. Let me just Huntsman Elite. I have the V1. Uh, what type of optical switches? So these are optical switches, right? And they're slightly clicky. So that one you can go as fast, but you have good feedback. And the thing about that one is you can choose where it actuates, I think, if I recall correctly. But I never really played around with that. Never quite 30% shorter actuation than other clicky switches. I don't know if you can adjust it. I can't remember actually. But yeah, that was my third keyboard, and then after that, then I was like, yeah, I would prefer to have some more feedback without the noise. So then, yeah, I went with banana switches. But yeah, I really enjoy this keyboard. I would highly recommend it. And the great thing about this keyboard is that all the keys are hot swappable. So what I've had on two keyboards is after maybe 2 years, you'll have like one switch go out. And the thing about me is I'm super like no nonsense. I really don't want to deal with soldering and desoldering and soldering. I've never had that phase in my life, so I just kind of like, I mean, if I need to get to that point in my life, I'll do it. But then the great thing about these ones is that they're all like hot swappable, meaning you can pull out the entire switch and put in a new one, right? And that picture I showed you is like 25 bucks for 110 switches, right? So and maybe like well maybe it might be 10 bucks for like maybe 30 switches. So if I mess up a switch or a switch goes mushy or doesn't register the same as before, I can completely change the switch, and that would just save me. That means like the operating life of this keyboard is basically going to be like pretty robust. So you're like that's why you don't need to go with like some of the name brand people like Corsair, Razer, because those are non-hot swappable. I would go with these new companies called Keychron or whatever. There's a lot of these type of companies based out of China. Um, that are making amazing products. I would highly recommend. Like they're basically taking advantage of these large companies that because they're incentivized not to give you hot swappable anything, right? Because if you make it hot swappable, then that makes it so that hey, I'm not switching a keyboard every 2 years. I'm switching a keyboard every like 3 or 4 years, right? So this is a very enthusiast thing, but I think it's worth it to go down this enthusiast path a little bit. And yeah, and the thing that's great about this keyboard is because all the switches are hot swappable, if you actually end up not liking the Jupiters, you can take them all out, sell them on Facebook Marketplace to someone, and buy some other branded because it works with because these ones use normal switches, so you can swap them for basically any branded normal keys, and yeah, and keep switching them and trying them out until you find something you enjoy. And of course, the keycaps you can change too, but keycaps are swappable for pretty much most keyboards, I would say. So yeah. Yeah, it's like kind of in between. You want to figure out like what is too high of actuation force, because some people go like up to 100 grams of actuation force. That like my cousin types at that high, but then if I had to do that much data entry, then my fingers would definitely get tired. Like so I went too low. I went to the lowest, and then I figured like, hey, I need something a little more with a little more feel. So I've kind of like, for me personally, Jupiter bananas are the best for now, for me personally. Yeah. Okay, going back to this, I definitely misinputted this. Yeah, I don't even need to. Okay, go back. Apologies. 508, current liabilities. 77779 49001. Okay, cool. Okay. Excuse me. So currently, they haven't changed the forecast. Let me input their 2025 numbers real quick. Okay, so we have 424, 400, 4, 4, 8, 8. I believe these are in line with what I saw earlier, but I'll double check. Do they buy back shares? Let's see. Let's look at cash flow statement real quick. Yes, they do. 448. Small amount though. Sales treasury, cash dividend. Most recent amount was very low. So yes, but very low. Previous year 448. Millions of yen, yeah, so very low. Okay, and then we wanted to double check to make sure. 21.5, believe this makes sense. 21.5, 4.5, yep, good. We want to get a sense of DNA and capex, so I'd like to keep my former career kind of hidden for now. For now. Uh, there may be a come a point where I will release that information, but for now, I'll probably just keep it, to myself. Yeah. I want to quickly take a look at, because capex is so much higher than DNA. I'm gonna look at historical capex and DNA. Appreciate the additional question, but again, keeping it silent for now. Yeah. I can tell you what my current style is. My current style is just value orientated, but I do prefer companies that have some type of growth or quality aspect to it. But I don't like to overpay for growth and quality, so I like to look for hidden growth that requires that is either going unnoticed by the market or is hidden in some sense, right? In that case, that would be a company like SK Japan. So I'll just give you like a 60-second breakdown, hopefully. So essentially, that company has a very simple business. It just makes plushies, right? So you acquire the IP in Japan, make these plushies in China, and then ship them over to sell them as prizes to amusement centers. Okay, and then they got 33% acquired by Round One, which is a company that runs amusement centers, right? And so that company essentially became SK Japan. Essentially, at a certain point, became roughly a 20% distributor of all the prizes for that company. So investment thesis becomes very simple. Oh, Round One is expanding in the U.S. If they are supplying 20% of the plushies in Japan to this company, what do you think is going to happen? What do you think is going to happen in the U.S. for that company, right? So I thought that a hidden growth potential in this scenario would be, obviously, if Round One owns 33% of SK Japan, they want to give business to a company that they own a big portion of, right? Instead of giving business to some other company. Of course, SK Japan can't supply all of their prizes because different companies purchase different IPs, right? So they might have an IP for XYZ anime, and then some other company will have prizes for ABC anime, and et cetera, right? Um, but yeah, but the good thing about that is the more prizes that they make, they have more scale, and their operating leverage improves over time. So not only that I expect revenue to continuously increase as Round One is expanding in the U.S., their margins would improve as well, right? So something like that, right? But all that you needed to do was really like that. No one hands that information to you on a plate. You gotta actually have to like look into that, right? So SK Japan's like really under the radar. I remember sharing that pitch to a couple people, and they just looked at it and just like, eh, couldn't feel what I felt, and then like, yeah, and then what happened was recently, yeah, the stock is over 100% up, right? And the thesis worked out exactly as I said. Like I looked at their recent filings. The reason why I can openly talk about this is because if you look at their recent filings, you'll see that their U.S. sales have gone exceeded 10%, and in Japan, when your overseas sales exceed 10%, you have to report it, right? So basically played out exactly as I thought, and it's a very simple thesis. It doesn't take a lot of work. So that's pretty much my style. Yeah, yeah. I don't look for like the cheapest of cheapest, right? Like I want to look for something that is cheap, but also has some component of growth where things are growing, right? Um, yeah. But I encourage you to check out my Substack, and if you check out my Substack, you'll get a sense of how I invest, pretty much, what that looks like. All right, where was I? Okay, I was looking at the cash flow statement, trying to look at their DNA historically. So that's going up. CapEx. So only the last 2 years it's gone up to 20. And this makes sense. This coincides with their flour mill, probably. Their CapEx probably comes from the flour mill, so we probably, let me write that down as a note. Where the CapEx comes from. Yeah, so I don't, yeah, because it's only last 2 years is this much, and then last year is minus 7.8, so I don't expect depreciation to go up that much. And now, depending on my answer, after they have finished creating the mill, then capex could drop, but I'll take a look at that. But let's take a look at the last couple of years. So we have 13, 13, 25, 35, 48, 54, 60, 70, 78. Okay, let's call it 120 then. Around 12. Average over 12 years, around 12. This probably tunes up. I don't know, 500. Let's do something like that. Not about 4 times PE. So if they get to 25, it'll be 4 times, roughly. EV bit. And by that time, they might even have more cash. What have they done with dividends? Let's see. So most recent 30s, 30, 33, 60, 60, single year, 38, 28, 21, 19. Okay, stay stagnant for a while. Okay, so I listened on a podcast, David Orr saying like sometimes he invests in companies and he'll only look at the company like once or twice a year. Once basically when they have the annual report and maybe they have the semi-annual report. Um, but he has like one sentence investment thesis like, oh, management is good at capital allocation. So this might be one of those scenarios where revenue is expected to grow, they're expanding, right, internationally. They're going to increase their frozen product categories, their frozen product, frozen food offerings, and then expand all the other categories. So with that in mind, the company's probably just going to continue to grow. I think it's as simple as that potentially for this company. For him, exactly. Let's take a look at the price. done for the last year. 2100. It's a low downside. Pretty low downside. Like if it drops 150. It's only like some percent downside. Upside also not that high either. Changes rebound. I think he has this in his thing because that's probably low volatility. More than I'd like to admit, Tate. Because for me, I like to read about a company and understand the story and then let it marinate in my head. Um, Sometimes I'll create a financial model on it, like a messy one. Um, so I would be surprised if I spend anywhere between, if it's fast, it could be anywhere, anything lower than 50 hours. I've had some stocks that taken me over 100, maybe 150 hours. But I need to improve my process. I'm pretty unproductive in my process. I need to make it more efficient. But there have been a few stocks that have been about where amount of time I've spent has been quite high. So let me review some of them with you. So higher smart home. This one definitely took a long ass time because this was like a more of a special situation type of deal. I did a full financial model on this. This took me definitely over 150 hours. Round one probably in between 100 to 150. SK Japan, that was pretty fast. Honestly, this one's the quick pitch was really fast. That took me like a day, and then the deep dive took me a little longer because I had to cross-reference stuff, read in between the lines a little bit, do a more complex model. So this one's probably like 50 to around 50 hours maybe. AGF Management Limited. This one's pretty fast. This one made it taken me 3 days. So like maybe less than 30 hours probably this one. Glory took me a while. Glory, I have a model on that one on my own. This one might have taken me around 75, something like that. This one I really enjoyed. I can't tell you what stock this one is. This one is behind a paywall. This one I really enjoyed doing research on. Yeah. This one is, this one's around the 50, 75 mark, probably. What else? For you took a long time. For you, probably 75 to 100. I just really got in the weeds. They have many different segments in this company. Fast Fitness Japan also took a while because I wanted to take a look at their comps. There's a market anomaly where all their competitors who have poor business economics, way worse business economics, were trading at much higher multiples than this company by itself, which I didn't understand. But I was trying to get an accurate lay of the entire landscape of 24-hour gyms in Japan. So this one took longer. Yeah, probably 70 to 100. This one, looking into pachinko companies. But yeah, the thing is, I actually enjoy the process, so I don't mind putting more time into understanding the companies, and that's kind of how I get these more detailed insights, more unique insights into the companies. Yeah, I just thoroughly enjoy it though. So the time passes, but I don't really mind it. I don't. It's like, oh, it's 100 hours. No, but I'm enjoying like pretty much every hour that I'm doing this, right? So it doesn't feel like work to me. You know? It feels like I'm learning about a new business type or business model, so it's pretty enjoyable. So yeah, so I definitely would put Nippon on that list. Looks interesting. Worth spending more time on. So if I were to make a tier list, actually, yeah, we can put a tier list. Let's put it in a tier list. Let me see how I want to introduce that. So this is November now. This is not that challenge. This is just Militia ETF review. Okay, so what we've had so far is I didn't copy that, but that's okay. 2001. So keep in mind, I've only surface level looked at the company, right? Would I like margins to be higher? Yes. So that's probably what's preventing this from being an S tier, but it probably is in an A. So I do like that. And then the other company we looked at today was 5958. 5958, if I recall correctly from, well, we can just check it out. With higher price now, they're trading at like 4,000 something yen right now, if I remember correctly. 58, but I think earnings probably went up, right? So if earnings is going up, let's take a look real quick. $30 billion. Oh, stagnant. Operating income 2.5 dropped slightly. Willingness to increase dividends. That was one. How about buying back shares? Oh, okay. 581. Okay, buying back shares. So they launched 581, so that's very shareholder friendly. So that's probably why it re-rated. Yeah, I would put an A. I don't know too much about the business economics. Let's look at profitability real quick. Profitability, if I recall correctly, I went up to 8% and then dropped slightly, but before that was like low single digits, but then has ramped it up. I don't know how that's possible. I need to look into that, but still low profit, low margins, being shareholder friendly, unlocking capital, 5% div yield, right? I think it was 100. Double check. 100. So at the end of the year, it's like 200, right? 200. So just slightly under. Buyback yield, dividend yield, 6%. Okay. Yeah, if revenues continue to increase and all that stuff, and they become more shareholder friendly. Oh, 210. So 210. So 220, even over 5%. So yeah, good dividend stock. Low price, probably has some investment securities on its balance sheet, yada yada yada. NCAP earnings. Yeah, let's put this in A. So, 5958. Yeah, and the thing is though, also, right? Like, I'm like really bad at writing. I'm like a fifth draft writer. So for me, like I would have built that conviction actually way earlier. Actually, like let's say an idea. Because when I did the higher one, right? Because I didn't know what the market wants in terms of research, right? So I just like overcompensated in terms of quality. So I like spent way too much time trying to make the Excel model, the investment document, and all that kind of shit, make it look like more like nice, even though it's still kind of crap in terms of formatting. But yeah, I was just trying to like make things like look nice and whatever. So if I like that by the like for example round one, right? Like it took me like a month to finish, but then I already had conviction on it in like a week. So like and then my conviction built as I continued. Like it was just like looking for things that reinforce it. So I had to do the thing about round one was like they, I believe their finance, if I recall correctly, their finance thesis are like 3 years. but the actual useful life of their crane games are literally 10 to 15 years, right? Because it's low tech, it's analog technology, right? For the most part. So yeah, they depreciate it fully in 3 years, and then what after that's paid off, and you can use it for an additional 7 years, let's say let's say 7 to 9 years, for example, right? Then that goes straight to free cash flow. So you have after 3 years, you have like an uplift of free cash flow, right? So I have to build that schedule out, but like, like I already kind of knew in my head like what that would look like, but I had to build this out kind of just to reinforce that type of shit. So yeah, I don't do a lot of trading though. I would say I do more just like fundamental value investing. Yeah, yeah, yeah. No, I think I've gotten to the point where I'm like a lot better at this now. Uh, but I would like to stay humble. Like, still have lots of room to grow. A lot of sectors I don't know about. A lot of things yeah, yeah. So I enjoy actually finding new businesses and new business models and learning about them because it builds on top of my current pattern recognition. I have things that I've done. Like it's not a waste of time because every company has like different nuances, and then once I figure it out, I know how to reapply it to a similar situation in another stock. All right, so it builds on itself. But like yeah, like I wish I didn't have to like write any of this. Like I wish I could just speak my mind to AI and just have it draft the entire stock pitch for me, and then like my life is awesome, right? Um, then potentially, actually, it probably is getting there, which is nice. Um, but yeah. I think that's very important for a trader. So a trader knows how to basically what their edge is, right? So if you know what your edge is, then you just basically attack your edge, right? So it's like a poker player. I play poker, right? So I know exactly how I'm beating my opponents, right? Like where to tackle their weak points, right? So that's similar to the market, like where it's like inefficient, and then where to attack. But I'm not really a trader, more like just fundamental value investor, right? And so um, yeah, yeah. Just to have complete conviction, you have to know exactly what the downside is for a company and having the complete narrative very clear in your head. And for me, that takes a little more time. But then what results in that is once I really fully understand a company, I'm very certain that I know the company more than most of its participants. And so when it acts irrational, I can capitalize. So, for example, round one, I've capitalized on that company like several times in the last 2 years. I don't want to say how much I made, but I've definitely made over 3 digits in returns on that company alone. Just compounded through how many times I've entered and exited that company because I understand it like so much. I was like, oh, now it's overvalued. Take profit. Oh, now you're being too pessimistic. Take profit. Let's enter again. Like so. Yeah. So that's what I like. Mm-hmm. Yeah. Yeah. So far, the two companies I looked at, I quite like what I've seen so far. I would agree that these are good. Let's see what else there is here. Kitano Construction, dividend 2%, EBIT margins 4%. Just too damn cheap type of deal here. Point 0.6. Free cash flow negative. Don't like that. Subakimoto. Of course, I haven't looked at it. This is a very surface level. Stars in Company. Let's see. Okay, so some debt. That's okay. They're growing. What? Okay, let's look at the highest margin now. Let's change things up. Just wanna. So Tate says, I'm not too familiar with Japanese stocks, but I know a lot of fundamental value guys in the US markets that kind of get stuck when their returns are pulled forward, especially if it was meant to be a longer term thesis. What do you mean by when the returns are pulled forward? Japan eyewear, interesting. 31% EBIT margins, holy shit. 11 times PE, 9 times, I like that, 2.6 times. Huh, never looked into this company, let's take a look. I like consumer companies, 5889. But isn't that a good thing? That's a good thing, right? So, yeah, no, that's cool. Yeah. So, I think that's a good thing. It just means that you need more idea flow, right? So you can't just be like, oh, it hit my target already. Like, I mean, that's what happened to me with round one, right? Like, it immediately hit my price target very quickly, and then like, I was like, okay, what do I do now? And then so it's important to have more idea flow. I think that's just a problem with idea flow. That's a problem I have too. Right? Sometimes I'm just like super quickly. So, for example, like what was it, Glory? Glory, I wrote about it, and as I was writing about it, it was going up, and then within like 2 or 3 months, the company's up 60%. Basically entered like around like fair value, where I think was approaching fair value, but because it's like a growth stock and has expansion into other countries, it's a good hold. So it went from like buy to hold essentially, but it hit that really quickly, and you don't come across these like, but it's a good thing. It means like now you just find something else to reallocate capital to, right? And yeah. 3,800. Prices dropped by half. Japan Eyewear Holdings. Let's see. Wow. How did the price drop that much if it just increased? What? Huh. 45 billion. around the same. Revenue doubles and then operating income 5x's. Very nice. Don't know what the business model is. Let's take a look. Two subsidiaries engaged in designing, manufacturing, selling eyeglasses in Japan. The company was incorporated in 2019 and based in Sabai, Japan. Did remember Made in Japan pitched some stock that was in relation to eyeglasses? Is it this company? Is it the same company? Oh, it might be. It might be. Wait, it wasn't that so long ago. Hold on, let me see. JEH, Japan Eyewear Company. Okay, I have access, but just in case I don't want to ruin his surprise to people. Yep, this is the company. So yeah, if you guys want to support Made in Japan, another fellow Substacker, definitely go check out yeah, his write-up on it, which I will be reading in a bit again. I've read it before. I can't remember much about it though. It's been a minute. But yeah, definitely this is another fellow brethren that's looking at Japanese stocks, so definitely check him out. But now I will have my own look at this company. Let's see here. Just before I even do that, let me just take a look at the aesthetic, you know. Design is also a very important component. Pure passion and uncompromising spirit in this craftsmanship is the firm foundation of JEH. Fair enough. History. Relatively early. But really appreciate you engaging with me in Tate today. It's nice having people to talk to in the chat. What type of investing do you do? You talk about traders earlier? Do you trade, invest? What do you prefer to do? Oh, medium-term management plan. That's something to look at. So I want to get to 10 billion operating profit. Currently, if I remember correctly, 45 market cap. And how much enterprise value? Let's see. At around the delta of this is around 12, so 67. let's say 7 times EV, but it looks like they're generating a lot of cash. So by that time, probably debt probably lowers substantially, unless they're investing heavily onto growth. I don't know if they use a store expansion strategy or if they're like, I don't know what their strategy is. Do they just make glasses? Do they have stores? Do they just, Also don't know what the insurance policy is like and healthcare is like in Japan. Do people just like write it off? Like you have a budget from your health insurance, like in Canada, you have like, depending on the plan, but like for example, you can get like $200, $300 every 2 years type thing to use on glasses, or $300. Luxury eyewear, that's their positioning. Oh, it says 1958. Wow. Okay, so they were founded like they IPO'd in like 2019, but okay. 83 stores in Japan, 2 in France, 3 in China, 1 in Hong Kong. Wow. Aggregate price to unit price refers to aggregate price of eyewear frames and lenses. Average unit price for the third quarter. So 10,000 yen is $100. So these are roughly 500 USD, like around 700 CAD. So these are pretty luxury, yeah. 99.949s, 1995. 15 stores in Japan, 1 store in Singapore. Also around the same price point, essentially. Sling stocks, so Tate said he sling stocks around both long and short. Complete disregard for the actual business being run. Lol, JK. I mean, dude, if it's like that, it's fine too, right? Like literally, literally, what in a podcast, David Orr says that some of his portfolio managers, because they have like so many positions, right? Some of them just keep track of when they're at a point of inflection. Some of them is like, oh, this stock only cares about like the only thing that matters for this stock is revenues growing, right? Um, and so they're just getting into, let's say, it's a narrative play, right? And they just long it because they think it's momentum wise, it's just going to continue to go up because the story is not changing, right? So, um, yeah. Yeah, one thing I want to do is learn how to short because I never. That's something I haven't really engaged in, mainly because of the brainwashing I've gone through in terms of value investing, where it's like, oh, you don't, because upside is 100%, downside is infinite, right? In the shorting area, which is why you have to size. You have to size really small, and the thing about me is like, for me to get conviction in something, like I don't like no, if I spend a lot of time researching something, I don't want to have a minus 0.5% short position, right? Like I want a larger one, but the thing is, if you for some reason you have really terrible news and then the stock 10 bags on you on a negative 5% short, you're getting fucked hard, right? So which is why you have to go, really small, and then the ones that you like, David Orr says he shorts anywhere between 0.5 to 2% or 2.5%, something like that. But yeah, the ones that he sizes as a negative as a 2% short position are ones that where the upside is very limited on the short, right? So yeah, which is why long really works for me because like, oh, I can do my work once and then I can profit from it multiple times and continue to profit from it, or just hold, right? I like doing work where the upside is infinite because it just means the leverage on my time becomes like really good. Whereas if a short it goes to zero, it's like, yeah, you're capped out at 100%, right? And the longer it takes for that to work out and whatever, but then for that to be a small ass position, it's just kind of grueling. Okay, Tate says, but yeah, trading, hate to admit it, but pawn shop like style, catalyst based, mix of growth. And no, don't hate to admit anything, dude. Like do each their own, right? Hate, yeah, pod shop like style, catalyst based, mix of growth and value, pick and choose factors I want exposure to, Just trying to make money all the time, never more than. Okay, cool. Well, yeah, I'm actually wanting to learn how to short because of that reason, so that you don't have you run like a market neutral thing, or like lower your beta, or like borrow money to fund your longs essentially type thing. I think that's interesting, right? But then what I don't like about that strategy is you have to allocate a lot of time, right? It just means in order for you to go more long and stuff, you have to go short on things, and you have to watch them, understand it, and then yeah, it becomes a huge grind on the time aspect, right? Whereas yeah, but I definitely think there's merit to it. I definitely think there's merit to it. Yeah. 12 to 15 positions can trade any sector in mid caps for longs and mainly hunt in large and mid cap for shorts. Just do liquidity and just natural low and EX growth characteristics. Sorry, what is natural low and EX growth characteristics? I understand the liquidity part. Hey, what do you think of David? He doesn't like the crowded shorts, so probably he avoids like really the larger cap ones. Yes, better liquidity. You can get in and out really fast when you have smaller positions. But I don't know if you looked into this stuff, but like, what do you think of his shorts? What do you think of his uncrowded shorts, um, and how those play out? And then, what do you think of? Here, this is a thought process I've had. I've never really, I don't know, because I'm trying to get into the process of learning how to short, and you don't really learn stuff until money is really on the line, right? That's really how you learn. So, what do you think of having 20 positions short at any given time, where they're sized at 0.5%? So I basically have like a 10% exposure on the downside, on the short side, right? Or max it out at 1% maybe as a 1% short, and then have a rule where it's like, oh, if it goes up, as the stock goes up a certain percentage, I just cut it and just take the loss, eat the loss, and don't even fucking look at it. Just accept that you're fucking wrong on it. Um, what do you think that threshold is? Right? Is it like, oh, uh, if the stock goes up 20%, I'm just gonna take the loss and just eat it, and then move on to the next thing to short? Like, what do you think of that approach? Like, just having 20 positions where I'm shorting, uh, just to build up that type of experience. You know what I mean? Um, yeah. Or what do you think of? Hey, I'm looking to shorts, and then I don't put in all 20 shorts at the same time because it's gonna take me time to accumulate the knowledge of knowing even what the fuck to short, right? And then I think I'm gonna start off with non-crowded shorts first as well, um, and looking into that. Shorting, so Tate says when shorting, like the best shorts are obviously growth stocks that start decelerating, which happens a lot in larger stocks, right? But then the risk there is like those meme stocks that basically get a lot of traction, and it's like some news basically makes it spike like fucking 20% in a day or some shit. Obviously, I've never shorted, so I don't actually know what the sanity number is, like that kind of thing. But like, yeah, how I like to look at it is, do you play poker, Tate, by any chance? Okay, so in poker, right, you can play small stakes, right? Like poker, like the number one principle is always play against people that you're better than, right? So where is the market for shorting where we're pulling the lowest stakes? Like the local casino 1-3 is lowest stakes, and I'm very sure like my conviction, my track record shows that I beat 1-3 like hands down, easy, right? It's like taking money from kids, right? Over the long run, for me personally, right? What is the equivalent to that in the stock market now in terms of shorts? Okay, so Tate says, find closer to maturity, so lower growth, maybe terminal value concerns. So essentially, okay, so it had like a period of like high growth or expectations of it, and then wasn't able to live up to the hype. And so the or it has reached some level of maturity. So it's like you see that in a lot of Japanese stocks as well. You see a lot of Japanese stocks where it's like, oh, we have expectations of opening fucking 200 restaurants in the United States, right? And then they're on track of opening fucking 2 restaurants a year, right? So like, when the fuck are they gonna get to 200, right? So, and then basically expectations boil down to, oh, with this increase in competition or business economics, maybe we can only open like 50 restaurants long run, right? And then that basically makes the stock basically pile down, right? You see that a lot. I'm just making a hypothetical. I can't remember off the top what company that is, but similar to, right? Derivatives. Okay, I'm gonna whip out some finance course material to get revamped on that. Okay, so take the derivatives and then get liquidity, especially for your style where it's a serious concern. But if you can get creative with structuring options, ratio calendar spreads, or just vertical spreads, or just outright long options. Okay, I have, dude, I haven't looked at options in a while. It's been a minute. I have to also revamp my knowledge on that type of shit. Can't believe I'm admitting that, but yeah, it's been a minute. You gotta, yeah, I've studied it, never really put into practice, so I basically it's like Charlie Munger. I haven't looked at like advanced math in a long ass time. And if you don't use it, you kind of lose it, right? But I'm pretty sure I can, after I revamp my knowledge, get back on the learning curve. Shouldn't be hard. Okay, so I run a very concentrated long strategy. I'd like to do like if I find something that's interesting, I'll buy a starter position to motivate myself to look into it, right? So I'll have anywhere between as concentrated as I've had as concentrated of less than 10, up to maybe like 20 25, right? But then I'm willing to be as concentrated as I think I've had like okay during the Japanese crash, I had 50% in one position at one point. Because I was like, this is a sure thing. I know all the variables about this company. I'm like just very, very, I know, but yeah, not great decision based off Kelly criteria. But I'm just like, I don't give a fuck, um, because it's like I know these companies like the back of my hand. So it's just like, okay, go 50%. But right now, in normal circumstances, I can have 25% in one position. So yeah, so yeah, and sometimes I have like a basket approach idea, right? Like where I think like okay, these companies under in these fields are undervalued, right? So I don't just like bet on one company. I hold more than one. So then that can increase the count a little bit more. Yeah, if I'm making like a theme bet, right? But typically it's just stock picking. Yeah, for the most part, stock picking. Yeah, and sometimes I get lazy. I'll read someone's stock pitch and be like, "Oh, that's a great idea. I agree with what this person's saying." Let's buy a starter position, right? Because I want to get paid for reading. And for the most part, I've done decently well. Oh yeah, 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 yeah. But hey, just a question for you, because has your because since you said you like to prefer to have like 12 to 15 positions, which is kind of quite like not a lot in terms of having a long short strategy, right? So then, when you get into a situation of when your longs are going down and your shorts are going up, then has that happened to you? And if that has, how have you dealt with it? Do you immediately rebalance? Or like what do you do in that scenario? They have Issey Miyake eyes in here. Oh, interesting. I like the designer Issey Miyake. Okay, they have their own direct stores. Yeah, if they charge 700 CAD fiber USD for a pair of glasses, they definitely have good margins. So, mm, what I would like to know is like in this scenario is like if insurance like how generous are insurance policies in Japan, and if so, because if think about it, right? Like if a pair of glasses, even if it's 500 USD, right, 780,000 yen, but if they have like if someone has 100,000 yen to spend on eye care in 2 years, right? They're gonna go for the most expensive thing. They're not gonna. They want to spend up as much budget as possible, right? It depends if it's too low or too high, right? If they only have like 20,000 yen to spend on glasses, then maybe they won't go for something like this. Yeah. So those can be Tate reply. Those can be good shorts that you can pair with your longs. Beta shorts are dangerous where you're just short average versus the sector. That shorts go down no matter what you know. Yeah, and to be honest, it doesn't happen too often. Like I said, my book can be pretty diverse. There are two sectors I want exposure to and hedge out what I don't. Two shorts or something else. Nice. I also need to revisit the math on how to calculate the factor exposures. Do you do that with like Excel, or do you like have a program, or is that even just might be a dumbass question? Is it even already embedded into Interactive Brokers where you can just even see what the factors are? Ginza, expensive neighborhood in Tokyo. The stage, Hong Kong. Ginza means. So if they change in price means they've increased prices. They didn't decrease prices, of course. Yeah, increase prices, increase. So 2 increases in 2021. Okay. Okay, so well, it's like it's even over 33% operating margin, 36% ROE. Oh wow, 25%. Store increase plus 15 5 years. They are at what right now? They are at 16. Oh. 16 generating 5. So you're telling me you go into 28 and only double? How's that possible? So, so they be conservative here? Hmm. Does not include inorganic growth. So this is just a base case off of their current businesses. So if they acquire more business, I don't know if 99949s was a acquisition, something to look into. But if they buy something else, but the thing is, they have to do this through their own stores, right? So there's some store risk here, meaning because I think Exotica or whatever, they control. If you're Gucci, Prada, LV, whatever, and you want, if you want access to those type of frames, you have to be a client of the entire Exotica brand. So it's not gonna be easy for them to sell outside of their own stores because of that. Completely, Tate says, I'm completely offsides and it was a key risk day. I very quickly rip off risk and put on new ideas and restructure fast. Okay. Man, to be honest, it's more about practicality and less academic shit factors to mirror like revenue drivers, macro risks, large themes, what sector it's in, size of company, growth profile. Okay, okay. So we're not getting super academic with this shit. Okay. Understand. Yeah, yeah, yeah. Yeah. So so if you're investing in something where the interest rate risk of it going interest rate goes up, then you want to probably have a counter position where yeah, you benefit and also not benefit when interest rates goes up, something like that. Hey, do you think when David or when he talks about like correlation, that kind of stuff, and he's like hedging his like factor risk, do you think he's doing it just practically, as you said, or is he actually like going through the hundreds of positions to actually figure out the factor exposure and then actually balancing it academically? Do you think he's actually doing that? It says, yeah, yeah, exactly. TLT and other ETFs can get used too to offset any risk, like 2023 higher for longer narratives. Rates just start blowing out and high valuation stuff just was getting crushed. Hmm. Mm-hmm. Okay, so Tate says it's probably pattern recognition for him researching stuff. He finds the key stuff that matters and can spot key risks. Maybe he does it academically and has a math factor model because he's institutional. Yeah. Uh, yeah, fair enough. I feel like if I were to do it, I would try to over technicalize it and actually have the math factor model so that I know how to do it. And then after doing it for a while, maybe if I get lazy, but I know enough about how to, hedge my risks, then I don't have to get that technical about it. But I think in the beginning stages, I probably would get super technical. And then Tate says, is macro a large return attribution for Japanese and small caps? I don't really pay attention. I don't really look at, I don't really make bets on like currency, interest rates, that kind of stuff when it comes to the Japanese companies. I feel like purely just look at the fundamentals and then really bottoms up with it. Yeah, and that's why I love companies in Japan that own U.S. operations, right? Because then you have a leg that is generating profits in a complete different region. So like long-term stuff like, oh, decline in Japanese population, um, that kind of stuff doesn't really affect the U.S. part of things, right? Um, yeah, so I love companies that Japanese companies that have overseas operations, and I think that the growth aspect is still being undervalued by the market in that regard. Yeah, but I for the most part don't do any. I currently don't do any hedging. I don't, you know. Yeah, so what I've noticed is that some companies with some will have growth trajectories that are just out of whack. But then because I've never shorted before, I don't know what to target. Um, and then David Orr said something about in the podcast. He said something along the lines of sometimes when he had a mentor that taught him how to short, and then one thing was like, oh, all that matters for this company is that all that investors here care about are if revenue is going up. If revenue goes up, then it's going to continue going up, right? So it doesn't matter if they're not making money as long as revenue goes up, type shit. And then I don't want to be caught into that because I have a really rational, logical mind. I prefer to make decisions based off of reason. So that's why I've avoided shorting. But then, yeah, it's just kind of like figuring out the spots in which I can short, I guess. Um, have not done any work in that, so yeah. I mean, there is one company that I think is really shitty ass business. Let me take a look. So I would have shorted it a year ago, but let's take a look. It's called Rizap. Rizap is that Rizap Group. What is the ticker for Rizap Group here? See, let's see if I would have made money on this short, because this would have hedged my Fast Fitness Japan long. Uh, oh, shit. I would have done fucking awesome. Well, actually, no. No. Okay, I released. When did I release that one? Hold on. I released this one in October 6th. So, a little too late. A little too late to the party here. I would say October 6th. Yeah, so it would have dropped like 15%. Yeah, but no, this is a crappy ass company. this this company is so horrendous. Like I don't I don't understand. So what this company is essentially is, oh my god, I can't believe. Okay, so a typical gym, right? It's a large square footage thing, right? Like so for Fast Fitness Japan, they'll have like a set size. I think they do somewhere around. Don't quote me on this. I believe they do up to like 300 to 500 square meters is their like sweet spot, right? To have a gym, and that gives you enough room for like treadmills, heavy lifting equipment, like what is the fucking chest machine, whatever, Smith machine, that kind of stuff, right? So you need that much room, right? And then this company has decided, oh, we're gonna switch the business model up. We're gonna rent out places with like less than 200 square meters. Put in, we don't use any weights. We don't use any barbells. All you get are just machines, right? So you have treadmills, sure, and then you have just normal strength machines, but you can't. There's no moving of weights because they want to save money on the potential of you dropping weights and it damaging the floor. So their floors are really delicate floors, right? Um, and then to supplement that, they also have like this is a monthly annual basis, but they're targeting people who aren't very committed to the act of working out, right? And then to get people to go into there, they also have things like, oh, you can do your nails there, you can do some skincare thing, there's a massage chair, there's a photo booth, yada yada. Like they add other supplemental things that are not even related to working out. And I think that business model is just doomed to fail, right? Because first, you're attracting people who aren't really committed to working out. They're gonna sign up, they're not gonna get results, and they're gonna quit. So churn rate's gonna be massive, and they've just been like going up their ass in terms of leasing. So I don't see, but I was like, oh, I'm not gonna. So yeah, if I August 6th, yeah, roughly 240 ish. Yeah, it would have dropped like 20% roughly. Yeah. No, I typically know my oh, I know it's leading to high conviction by probably like the 10th hour. Like my process is pretty simple. Like I look for something that the market has not seen, or it's like, oh, this is a unique angle in this company I don't think many people have figured out. And then that, or this is okay. Like I would say, first hour is like, is this cheap? Yes. Okay. And then like second hour to maybe fifth hour is like, what do I know? What can I bring to the table in terms of my circle of competence and my knowledge about the company, and yeah, and pattern recognition that I have, and then it's like, okay, I've developed some unique angle, and now it's like, let's try to figure out this company, the story, the quality, yada yada yada, and where it's going, and then I think after 10 to 20 hours, it's pretty much just like after 10 to 20 hours, you already got like 80% of the thesis in your head, right? So the remaining part of it is probably just like the 20%, the nitty gritty, really technical stuff. Um, so no, I'm with you. Like I fucking. That's why I don't do really detailed financial models anymore. I just, I just do enough and look for exactly the data that gets me to 80%. Gets the 20% of the information that gets me 80% of the picture. But then I don't like not having the full picture, so I try to go for the as much of the full picture as possible. Let's call it. Yeah. Yeah, I think ETFs might work better because you won't have like less likely to have surprises. Whereas like, oh, you have some like crappy business, and then they suddenly have some surprise really good news, um, and then the stock goes up 100%, right? Like ETF harder for that to happen, you know. Yeah. So yeah, this was one crappy business I looked at that I just like was certain this company is crap. Let's take a look at the profitability. Yeah, look at that crap. Like, look at this shit. What is this? Like, bruh. Yeah, like the fundamental core thing about this business is like you're adding customers that don't really want to work out. Like what you want in a gym is someone that doesn't churn. You want a long-term person that wants to work out long-term. That's like the best customer you can have at a gym, right? They're attracting people that don't give a fuck. And then the thing is, let's say they do develop working out as like a hobby and something that they want to do and take more seriously, they're not gonna stay with this company. They're like, oh, dude, this place is lacking of a Smith's machine. This is lacking barbells. This is lacking free weights. I'm gonna go to fast fitness Japan, right? So it's gonna churn either way. Either you're not serious, or you are serious, and then you churn. So like, I just don't understand this business model. It doesn't make any fucking sense. Yeah. I don't have a database. I guess it's just in my head. But then the nice thing about writing a stock pitch is that you basically at that moment of time you do record all your thought process or most of it. Yeah, yeah, yeah. I leave some tricks in my own head. I don't. Yeah, sometimes. But no, that would be a good practice, right? You not only want to review your mistakes, you also want to review uh, things that you've done well. Um, but I also understand like sample size wise, there could be a lot of variance, a lot of luck in my own track record. So I take a very humble approach, right? I always pretend like I'm actually worse than I maybe am. You know, I'm the first person to critique myself way more harshly, I would say, and yeah, and thinking that I lack knowledge in a certain area. Um, But yeah, this company would be a great short, in my opinion. But oh yeah, if disposable income is a thing, like if you think people are gonna just lack disposable income, this would be a great short. Yeah. This would be if you had a gym membership at this place, you would just immediately dump it, probably. Yeah, no, which is why yeah, like having a Substack is so great. It's like it's a journal, right? In a way, even these stock pitches are a journal. Like you're recording exactly what you think are the key components, right? And then you look back afterwards and say like, hey, did it play out the way that you thought it would play out, right? And the answer is no. Look at that deeply and figure out, okay, what were the variables at play here that I ignored or didn't capture or I missed, right? So like one of my first mess ups was like CNTY, Century Casino stock. I thought that they would be able to pay off their debt with their free cash flow, but it turned into a situation where that was just not possible. And Yeah, the leverage definitely ate at the company. So that was me learning about the dangers of leverage and 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 levels of debt and how like a couple of quarters of just bad earnings can really fuck up a company. That's what I learned from that experience. Yeah, yeah. I guess for me, right, like I like looking at consumer stocks, so I probably have too much exposure to consumer, but then it's been fine. Then I could just be lucky in that this market is favoring my skill set. So I need to expand my skill set so that even when consumers is not in favor, I can eat. You know, so yeah. But yeah, I would think that shorting this company uh, would be a good idea um, for the things. But I definitely have not dove deep into this company, looking at their financials and all that stuff like that. But just preliminary screening of this company and just looking at videos describing what this company does, and I just like I don't understand how this can work. It just nothing about the business economics makes sense. It just feels like a cash grab where like, oh, let's leverage this company to the tits, do some IPO with some like high speculative growth outlook, and then me as CEO just earns a huge ass salary because the company's market cap is high. So felt feels more like a cash grab. So if you want a Japanese company to short, I would look into this company. But yeah, but for the most part, I haven't seen that many like that. Where this is the highest conviction short I've had in Japan, but I don't short much. But no, this would be a good short. I would feel, yeah. If you wanted to hedge out some like consumer risk, yeah, this would be one. Yeah. Um, there's probably an analyst on this. Probably. What do they expect here? 161, 187, 10 times P. It is growing fat margins, but probably has to grow slowly because it is premium and luxury. Not everyone's lining up the door trying to buy a $700 pair of glasses. Um, you have to keep it sacred and limited in order to preserve the brand image. The thing you want to do, what you don't want to do for a luxury brand is expand too fast and oversaturate the market with your product. Um, the idea is how do they extract more sales outside of Japan? So it's good that they've expanded to Hong Kong, et cetera, et cetera. But like, yeah, Worth looking into. Definitely worth looking into. What do they have? Investment securities. Yeah, that's what I want to look at. Yeah, I've been distracted. I have not been looking at this company in as much detail as I would like, but it's okay. Not your fault. It's my fault. Let me just take a quick look at that. So they expect 84 yen on 1.8k. So, oh, this pays more than 4% dividend. Is it 5? Closer to 5, yeah. The fat margins, growing growth, Asian community outside of Japan, right? So I don't know how Gentle Monster is doing in Korea, but I've seen Gentle Monster in Canada, so if they can replicate maybe that playbook, but I have no clue if Gentle Monster is under Exotica, so that's something to look into. Kind of go up that's close to 40% margins. 4.9s has around 33. What's their MCAP again? 45? Goodwill's from acquisition. And they can continue growing from acquisition as well because they have purchasing power. 3 billion of cash. They probably, how much room do they have for leverage? $1.4. Oh, okay, 12.8, around 13. Around 13. So I guess they have enough leverage. They could leverage more. They could. Again, they have enough fat. They have fat enough margins that I can pay out interest expense for sure. Margin. This is like nothing. So they definitely could afford more acquisitions. Interesting. So yeah, I know I agree. This is a good stock too. But need to spend more time to look at. I don't have the conviction yet. Also need to fill out the other things. So yeah, no, I really appreciate the talk, Tate, and feel free to slide into my DMs if you want to ask me anything in the future. Happy to talk. Great chat. Hope I can learn from you in terms of shorting. If I have any questions, yeah, what is your yes? Slide into my DMs on Twitter. I don't know because your YouTube username and your your Twitter, username might be different, right? So we can definitely continue chatting on Twitter. Would happily exchange ideas and hope I can pick your brain on how to short. Something I'm trying to add to my bag. I would say, and yeah, maybe I can teach you how to play poker as an exchange or whatever. But yeah, thanks for engaging today. Really happy that you're in the chat, keeping me occupied. And yeah, no, today, so as a recap, we had essentially three companies. I think these are all A companies. Nothing I don't like. So, I mean, this is consistent with my criteria of what to look for in companies, right? So, a 5889 trades at a forward P of 10 times, but it has room to have more leverage in a country where you can borrow at still pretty affordable rates, pretty low rates, I would say. That would allow them to have inorganic growth. But then what I would like to see from them would be to acquire a brand in some country like the US, where they can, that way they instantly have a foothold in that region, right? So then let's say they have Kaneko Optical and they have that, and then instead of having opening a store with one brand, because you have so much fucking space, right? You can definitely like, you can be very strategic in your store layout to have more than one brand, right? Um, I don't know, but maybe it clashes. Maybe if you have American brand and you have some Japanese brand, and then it there could be some clashing because the person going to the American branded store wants to visit the American branded store. Like if you want Japanese products, but I guess that's where Kaneko and the 9999 has some synergies because it is a Japanese brand. It is an Asian brand, so. Or it could be one thing where they acquire, like at some stage they acquire like maybe three, four, or five brands, and now they have six, 5 to 8 brands under their belt. So now they can open a store in the U.S. showcasing all 5 and 6 of their brands at the same time in one store. That would be some interesting business economics in that sense. So yeah, 10 times is too cheap. Really fat margins. I love companies with fat margins. It means that they're just going to survive a lot of anything you throw at them because they're just, cash flow rich. Um, and then, okay, what's the other company? The other company was pretty simple. It was 5958 was the what industrial company, Sanyo Industries. Yeah. So this one's low margin. This is more of like it's just the company is cheap type of play. Where they're being more shareholder friendly. They've increased dividends, increased buybacks, so you have a dividend yield, shareholder return. It's not like super cheap, but then that's like they're being more shareholder friendly. So for the most part, if they continue to be shareholder friendly and that kind of stuff, that can only be good for the company. What's the price to book at this company right now? Because I think that's a way to actually look at these type of situations. So price to book, no, zero point 0.4 went up to 0.5. So before it's too cheap. How about now? $29 billion on. Oh. Oh, okay. Still like zero point 0.4. So, okay. It's still zero point 0.4 then. Hmm. I could have room to grow maybe. Okay, interesting. And then the other company. So this was more of that. Not really a play on business quality, but more of a play on management being shareholder friendly. And then 2001, I believe this one was more on business quality. This one. This one's growth related. So yeah, yeah, sure. These are mid single digit margins. But because the company has been good allocators of capital, expanding in different regions in the world, in different countries, expected to continue growing. But the thing is, this thing has been pretty range bound. That's what I don't like about it. Pretty range bound, but likely to perform well. Have they increased their dividend? Dividend yield 3%, buyback, debt pay down yield. Okay. They have a lot of debt. Oh, yes, they do. Yes, they do. Oh, mama. Yes, they do. Okay, so, but they also have like a crap ton of, they have like 90 something billion of investment securities. So they have the capacity to pay down debt. So, not a big deal in that regard. But yeah, all of them I like. So far, all of them I like. Yeah. Which one would I like most if I were to rank these three? I would rank potentially. I haven't enough research on the Japan eyewear holdings, but potentially this one. And then number 2 would be 2001, and then third would be this one. Right? So, yeah. So thanks for tuning in to today's live stream. I think it was just for the latter half, just me and Tate, bonding a little bit there. Um, but yeah, thanks for tuning in. Hopefully, you guys, found some new companies that add to your adhesion, to your watch list. And yeah, I'll continue doing stuff like this. There's still a lot of companies on his watch list that I haven't covered. But of course, I'm filtering through, so I'm looking at the ones that the most attractive, and so far the companies that seem quite attractive have appeared to be A's. So not bad. Let's continue this. And yeah, all right. Appreciate you guys tuning in. Peace out.